Good morning. This is Larry McMillan with a stock market update on Monday, August 25th. So last week there was a positive result. The speech from Fed Chair Powell at the Jackson Hole Monetary Conference on Friday was very positive. The Dow blasted to a new high, and S&P was up quite a bit, although it didn't quite make it to a new high. Very close though. And so the S&P chart is still very positive. I'd like to see it make a new high, though, not just fade from here. But that can certainly be done in the next couple of days pretty easily. The overall picture on the S&P chart is positive. There are several support levels below here. The highest of which is 63.40, which was last week's low. The next one below that is 62.60. So as long as S&P is continuing to work its way higher, the overall market picture is positive. We do have some other indicators perhaps ready to say differently, but we'll take a look at those as we go along. One thing I've noticed in the past is that when S&P gets to a new high, as it's just now approaching once again its all-time high, and volatility is low, VIX made a new yearly low on Friday, that might be a good time to buy straddles. In other words, buy puts and calls with the same striking price on, let's say, the S&P 500 or on SPY. Or there's a low-cost ETF, SPLG. Any of those would work. And, if you buy straddles, let's say, expiring in October, you might have a pretty good chance to make money on that purchase. The McMillan volatility band signal is still on a sell signal. The equity-only put call ratios are still on sell signals. Put buying did slow down a little on Friday, so but not enough to change that status of a 21-day moving average. We'll see how things develop this week. But most of the other things were more positive on Friday. For example, breadth exploded and we had what's called a 90% up day. In other words, 90% of the issues were rising, less than 10% were falling. Same thing for volume on the New York Stock Exchange. And also new highs were very prominent, 193 new highs on New York, and only one new low. So those are all positive internal signs for the market. Meanwhile, as I said, VIX closed at its low for the year, and so that keeps the spike peak buy signal in place and also the trend to fix buy signal in place. That's a buy signal for stocks, not for VIX. So the last thing is the construct of volatility derivatives, and that's positive as well. So overall, we're looking at a pretty positive situation, not 100%. And things can change. If S&P should somehow fail right here, then we'd have a double top from the top last month and now a new one now, and that would not be a good thing. So it's sort of important to see S&P break through to a new high here in the next couple of days. It could even still do it today. I invite you to visit our website, check out our newsletters, the Option Strategist newsletter, which comes out once a week. We had some very interesting things in there on Friday concerning things that are a little bit different than you would normally. They're not speculative in nature necessarily, but there's a takeover situation. There's some earnings coming up on NVIDIA and other big stocks this week. And so if you get a chance, take a look at that newsletter. And meanwhile, have a great week trading.